Good morning, everyone. In today's video, we're going to look at how to claim a qualifying relative. Claiming someone who is not your qualifying child. This could mean claiming a parent, claiming a brother, like brother-in-law, sister-in-law, or other family member. Even could be a boyfriend or girlfriend, depending upon the circumstances. People often claim individuals on their tax return when they should not be, causing them to generate notices, penalties, and other tax issues, which we hope to help you avoid in this video. My name is Mike the CPA. If you're new to the channel, we make videos that cover finances, investing, and taxes to help you understand these complex subjects to help you build wealth. Okay, let's get started, but before we do, it would mean a lot to me if you can leave a like on this video or even engage in the comment section below. That's gonna let YouTube know to share this video with others. This video specifically covers the rules for claiming a qualifying relative, a non-child dependent. I have a free handout for you guys. I'm going to leave it in a Dropbox link in the description section and comment section of this video, so you can find it there. You can download it. It's 12 pages of free information that I've compiled for you from various sources. It's going to cover not only the rules for the qualifying relatives test, but also for the qualifying child test. Okay, here we go. Claiming dependents. Now, the rules that we're going to cover today cover tax years 2017 all the way through 2021. I got no idea what Biden's gonna do with our tax code come 2022. We're gonna leave it at that, and we're gonna move on. If the rules change, if they stay the same, we're gonna find out probably towards the end of this year at the earliest. In the handout, I've placed this link right here. If you click it, it's gonna take you to the actual publication on the IRS website, and you're gonna see that right here coming through. And this has hundreds of pages worth of information on dependents, the standard deduction, and so on and so forth. You can find additional information here if I don't cover it in this video. Okay, first things first, let's talk about some instances where you cannot claim somebody. You can't claim any dependents if you or your spouse, if filing jointly, could be claimed as a dependent by another taxpayer. You can't claim a married person who files a joint return as a dependent unless that joint return is filed only to claim a refund of withheld income tax or estimated tax paid. You can't claim a person as a dependent unless that person is a U.S. citizen, U.S. resident alien, U.S. national, or resident of Canada or Mexico. You can't claim a person as a dependent unless that person is your qualifying child or qualifying relative. There's those terms we're going to be talking about. I've pasted these tables from the IRS website directly onto this Word document so you can download it and find the information quickly. We're going to be focusing on this test to be a qualifying relative in this video, as I've already mentioned. But you can also see, here's the test to be a qualifying child if you're trying to claim a child who's under 17, or under 18, I should say, or who's in school, all that kind of stuff. So it is there, just so you know. There are a few tests we need to run in order to determine if we can claim a qualifying relative. The first test is the person cannot be a qualifying child, or the qualifying child of any other taxpayer. That's very important. That's number one. Secondly, the person either A, must be related to you in one of the ways listed under relatives who don't live with you, or B, must live with you all year as a member of your household. And it says, and your relationship must not violate local law. 3, the person's gross income for the year must be less than $4,200. This publication, things really haven't changed much, but the actual amount this year is actually $4,300 for 2020. But basically, if you're going to claim them, they can hardly make any money at all in order for you to claim them. And fourthly, you must provide more than half of the person's total support for the entire year. Multiple people can provide their support, but you must be able to prove that you've provided over half of it to be able to claim a person as a qualifying relative. Moving on down the line here, we have claiming a qualified relative. Let's go into a little bit more of the detail behind these tests and what it means and what you need to know. Now, the reason these rules are so important is whether you're trying to claim a qualifying relative or qualifying child, these kind of things allows you to unlock like the education credits, earned income credits. You're able to be claimed the child tax credit, of course, that's the biggest one. Other dependent credits, which is like $500 per person if they're another dependent, if you can claim them. So these credits are really important and really valuable from a tax perspective, which is why we're talking about them. And so knowing the rules is very, very important. And you should know that there's so much fraud fraud around these different areas of people's tax returns. That's why the IRS will quickly audit you if you try to claim somebody who you cannot claim or who you're not supposed to claim. Or if you claim somebody and somebody else has already claimed them, you're going to run into a lot of issues. You might not get the notice right away. It might actually come a few years later, and it might have penalties and interest attached to it unless you can prove that you can legitimately claim them. This is very important stuff. The first test of the qualifying relative test is we have to rule out that the person we're trying to claim is not a qualifying child. The way I would approach this for you guys is I would start right with the age test. See what's their age? If they're 18 or younger, chances are they're a qualifying child, which means they cannot be your qualifying relative. Start there, because the process of elimination, I think, is gonna go pretty smoothly if you start with their age. If they're over the age of 19, and between the ages of 19 and 24, within that range, in order to be a qualifying child, they also have to be a full-time student. If they're not a full-time student, then right away, and they're in their 19 or older, then right away you know they cannot be a qualifying child. So I think that will help you there. And the IRS defines a full-time student as, it says, according to the IRS, full-time students are children under the age of 19 or an adult under the age of 24 who attends an educational program at least 5 months per calendar year. So between the ages of 19 and 23, as long as they're a full-time student, they can still be a qualifying child. If they're not going to school full-time, then they cannot be. That's the age test. You also have to look at the relationship test. Is that person your son or daughter, stepchild, foster child, and things like that? Are they your brother or sister, half-brother, half-sister, stepsister, things like that? So I would start with the age test and then move your way to the relationship test. Once you've determined that the person you're trying to claim is not a qualifying child, you can then move on to the member of household or relationship test, which I think these next few tests are a lot easier to describe and explain. In a nutshell, what you need to know is if the person is related to you, if they're like an aunt or uncle, it could be your niece or nephew, grandparent, it could be your mom or dad, they don't necessarily have to live with you. If, however, the person's not actually related to you by blood or by marriage, maybe it's your boyfriend, your girlfriend, maybe it's somebody else, maybe you're just helping a friend out and they're living with you, they have to live with you in your household the entire year. If they did not, you can't claim them. But remember, if they are a relative, like some of the ones I just described, they don't necessarily have to live with you. So that's the NICS test. That's the member of household or relationship test. And the IRS details out what these different relationships are. You guys can pause the video if you want to read them. I'm not going to read all these to you on screen, but you're totally welcome just to read each of these for yourself. The thing I do want to mention, though, it says, if at any time during the year the person was your spouse, that person can't be your qualifying relative because they're your spouse. Lastly, a very important detail to point out on this, it says any of these relationships that were established by marriage aren't ended by death or divorce. So even if the person passes away or you get divorced from your spouse and you're thinking, oh great, now they're no longer my brother and sister-in-law. Well, no, that's not the case. An important aspect of the qualifying relative test when you're going through this is to realize that it's not like the qualifying child test, because when you're looking at the qualifying child test, you have to look a lot and focus very intently on what is their age. Are they in school or are they not in school? With the qualifying relative test, it doesn't have to be that way. So age really isn't a factor as long as they're not in between that weird age where they could be a qualifying relative or a qualifying child. Gross income test is one of the simplest tests and will probably weed out if they can be your qualifying relative faster than any other thing you can do. It says, to meet this test, a person's gross income, now this is the person you're trying to claim as a qualifying relative, for the year must be less than $4,300. They have to be dirt frickin' poor in order for you to claim them. If they made more money than that, you're out of luck. Because if you fail any one of these tests, whether it's the relationship test, member of household test, or any of that, if they fail that criteria in this income test, they're ruled out instantly as somebody you can claim. And gross income is defined by the IRS. I've put it here just in case you had questions, as gross income is all the income in the form of money, property, and services that is not exempt from tax, which is most forms of income. In a manufacturing, merchandising, or mining business, gross income is the total net sales minus the cost of goods sold plus any miscellaneous income from the business. So that's if they have a business type of operation. Gross receipts from rental properties are gross income. Don't deduct taxes, repairs, or any other expenses to determine the gross income from a rental property. Maybe that's the only thing they have. Maybe that's the only type of income they get. But it's based on gross income, which for the most part, as you can see, will weed out probably 90+% of people that you're probably trying to claim as a qualifying relative. And just to be thorough, gross income also includes all taxable unemployment compensation, taxable Social Security benefits, and certain scholarship and fellowship grants. Scholarships received by degree candidates and used for tuition fees, supplies, books, and equipment required for particular courses aren't generally included in gross income. And of course, it says for more information about scholarships, see Chapter 1 of Publication 970. There are exceptions for disabled individuals, especially if they're permanently disabled or partially disabled and they're working. But I'm going to leave that to your handout, or you can review Publication 501 if you'd like to see more detail on that. Lastly, we've made it to the support test. We're almost there, guys. All right, this is a support test specifically for qualifying relatives. And you can find a lot more information in Publication 501, which I'm going to show you a little bit here in just a second. It says, to meet this test, you must generally provide more than half a person's total support during the calendar year. However, if 2 or more persons provide support, but no one provides more than half of a person's total support, you can look into the publication to find a multiple support agreement, which I'm not going to really cover that, but that is something that could be a thing, but be mindful of it if that's the kind of situation you have with this individual. How to determine if the support test is met? You figure whether you have provided more than half a person's total support by comparing the amount you contributed to that person's support with the entire amount of support that person received from all sources. This includes support the person provided from his or her own funds. It says you may find worksheet 2 helpful in figuring out whether you provided more than half a person's total support. Well, we're going to look at that in just a second. Let's skip on down. I have an example here. It says your mother received $2,400 in Social Security benefits and $300 in interest. She paid $2,000 for lodging and $400 for recreation. She put $300 in a savings account. Even though your mother received a total of $2,700, she spent only $2,400 for her own support. If you spent more than $2,400 for her support and no other support was received, you have provided more than half of her support. That's just one example. The IRS Publication 501 has a couple different examples in here. It has a worksheet. If you go to their website, to that link I have at the front of this Word document, you can actually do Control F to search qualifying relative and then find this support test part of the website. And if you scroll down here, you're going to see some more examples, some more information. And so here's some examples here that you can look into further. It talks about the different types of income people have, foster care. So as you look at these examples, this is how you might think about calculating if you're providing more than half of their total support. Chances are, if they're only making like $2,000 a year, how are they getting by? They're not. You're providing it for them, right? Nobody can live on $2,000 a year. This world we live in now has gotten extremely expensive. So anyways, that's just my personal take on it. But if you needed to ever prove to the IRS that you can claim them, then this is the kind of thinking, the kind of process you would want to have written out so you could show them, hey, look, I'm providing their lodging, I'm buying food for them, and so on and so forth. Okay, so those are the 4 primary tests to process if a person can be claimed as a qualifying relative on your tax return. Remember, it's going to help you apply for that $500 credit per person, the other dependent credit that you would not otherwise be able to get unless they are your qualifying relative. So that's why we went over this, guys, and I get a ton of questions about these kind of things. So those are all the tests. Before we wrap up the video, I'm just going to show you real quick this Word document real quickly, because it does cover a lot of the rules for both the qualifying, to claim a qualifying child and a qualifying relative. Towards the back of it, what I've done is this is from professional materials. Actually, this is from Spidell Publishing, really. This is not my invention here. This is actually from them. But this is the flow chart, and I know it's hard to read and because it's not very clear, but this is the qualifying child test, and I've taken from their materials a complete flow chart that you can look at to determine if you want to find a qualifying child or find out if the person is a qualifying child. You can follow this flow chart and just review it for yourself. And there's also a few other charts in here. Let me zoom out. Sorry, I know it's hard to read, but if you download this and zoom in, then you can see it pretty easily. And then there's 2 or more claimants tests. That's if there's 2 parents and they're separated and they're battling over who can claim the child, the son or daughter. Well, then there's that in here. There's also a tiebreaker rules test for non-parents and also a tiebreaker rules test for parents. So these flowcharts are in there. I've added them for you guys. I've always wanted to do this, but never had the opportunity until now. And there's also a flowchart in here. This is a whole nother subject, but if you're trying to figure out if you can do claim head of household, this is the flowchart you can look at to help you determine if you qualify to claim them for head of household or not. Feel free to share this. Like I said, now this part down here is all from Spidell Publishing. I did not invent this. That's their material that I'm just happen to be sharing with you. In summary, when you're trying to figure out if somebody can be your qualifying relative so that you can claim the other dependent credit of $500, I would start with the gross income test because I think that's going to rule out most people instantly. Then move to the member of household test, whether they've lived with you all year or not. And then thirdly, move to the relationship test from there. I think that's the most efficient way to approach it, at least in my opinion. Let me know if your thoughts differ on that in the comments below. But that's how I would tackle this. I hope you got a lot out of this video. If you did, please be sure to drop a like, share this with others, especially other people in your family, because a lot of people ask me questions about this all year long. Of all the years I've been doing YouTube now, these are the most prevalent questions I get, which is big part of the reason I made this video. So let me know if you'd like to see an updated video on the child claiming a qualifying child. I know we covered it here a little bit, but we can go more in depth if you would like to. All right, guys. Well, I hope to see you down in the comments with your comments and your questions. I always love reading what you guys have to say. Make sure you're subscribed for upcoming weekly uploads around finances, investing, and taxes. Live life uncaged. Have a great week, and I'll see you all in the next episode. Peace.